Excellent.
All right. And with that, welcome back to Startup Talk. I'm their host, the Startup Coach, and with me today is Alex Morsink from Equivesto. Welcome, Alex.
Hi, Greg. Thanks for having me.
It's great to have you again. And before we get into Equivesto, can you tell me about your background? Where did you go to school, university, and what industry experience you had before starting Equivesto?
For sure. I did my undergrad at Queen's University in commerce at the what is now called the Smith School of Business. That's actually where I met my co-founder, Ryan. But after that, I went to work in corporate banking at Scotiabank on the risk analysis side, supporting financial institutions. So I worked there for several years, and then I switched to commercial banking at Scotiabank, helping review and approve lending products to small businesses and commercial sized businesses. I also spent some time, a small amount of time during that period working in private equity before I had the idea with my co-founder to start Equivesto. You're muted, Craig.
Yeah, I'm sorry. What motivates you?
That's a good question. Really, the driving force behind the creation of Equivesto with Ryan, my co-founder, was really the idea of improving access and equality and diversity into both the investing and the startup funding and small business funding space. Our experience starting Equivesto itself and communicating with friends who had startups and young professionals who were looking to invest was really one of, okay, if you're a startup looking to raise money, you have to try to raise money from angel investors or VCs. And, typically they're of a certain background that doesn't necessarily match with yours. And so you might be having a company or an idea that isn't well understood by them, and getting capital is a real struggle. And it's really up to them and sort of their decisions of who gets funded and who does get that capital to succeed. And then on the flip side, as an investor, the government rules for a long time literally gate kept investing to only individuals with over $1 million, excluding their primary residence. So you had to be a millionaire to be able to invest in exciting startups and small businesses. And that didn't really make sense because we were educated. We felt like we deserved the opportunity to invest smaller, reasonable amounts into exciting businesses so that we could have the opportunity to, grow our capital that way and sort of participate in the market. And so seeing, that whole combination was something that really sort of struck Ryan and I as something that we wanted to solve. And what really excites us is helping people, business owners, entrepreneurs really go and achieve their goals and reach their dreams. Like that's something we want to help fuel and we want to help change. And we don't think, you always have to go the traditional route to sort of make that happen.
So you mentioned Ryan a few times. Tell us about Ryan, how you met and why you decided to build a company together.
Yeah, so Ryan is my co-founder. We both met at Queen's. We were both taking commerce. He's smarter than me. He's got a double degree, one in commerce, but also one in math. And we always knew that we wanted to start a business together. We sort of split off to go work. I went obviously to the finance route to work at Scotiabank. He worked in tech at an IT consulting firm. And we always knew we wanted to start a business, but it sort of all came together with the idea around Equivesto and sort of combining his tech and my fin to make a fintech, and really sort of solve what we felt was this pressing need in the Canadian investment landscape.
So why does the world need Equivesto?
Yeah, so we are a Canada only platform right now. So the whole world, I don't know if they need Equivesto, maybe they need an Equivesto equivalent. But from a Canadian perspective, I think for such a long time, investing in private companies has really been a very manual process. It's been very much who you have access to, only for the ultra wealthy, all that sort of stuff. And so from the perspective both of companies looking to raise capital and people who are considering investing, that was really prohibitive. If your idea didn't match, what they were looking for, you wouldn't necessarily get capital you needed to succeed. And then on the flip side, as an investor, you didn't have access to participate in these exciting investments, and you couldn't even help support, businesses that could make a difference in your own life. And so really Equivesto is here, and what we're trying to do is create that opportunity for people to get that capital, for investors to be able to see and have access to some of these interesting, exciting deals and make a difference, and for companies to be able to raise capital from their own extended community. It's not just about going to these high net worth investors anymore. They can, of course, still participate, but it's about having more opportunities, not less.
So what are the challenges? You mentioned a few of them, but for entrepreneurs, not just entrepreneurs, but small business owners facing raising capital. I know small business owners don't usually be able to go to angel or VC investment. What are the challenges they're facing?
Yeah, so for a small business owner, typically because the business isn't hyper scalable and you're not going to go sort of international and global, you're not trying to solve an entire, $5 billion market just yourself. In that situation, you're typically not going to get that aggressive equity investment from a venture capital or angel group. So you're typically going to raise capital from in the form of debt. So typically you'd go to a bank, you'd go to a commercial lender, and you would lend against assets, or potentially you'd lend against revenues or accounts receivable. But in that situation, you're again sort of limited. If you're taking on debt, that's additional money that you'll have to pay back in the future. You can only borrow against the value of the assets you have. You don't have any opportunity really to go out and get additional investment capital from people who are excited to see sort of that business take shape, because you're not going to sort of do that hockey stick, massive $1 billion unicorn thing, go public, all that fun stuff. So that's sort of where potentially Equivesto can help, being a platform that can allow your community to come in and invest. They don't need to be coming in like an angel investor with $50,000 or $100,000. And so people can come in with $100, $500 and help invest in that business, that restaurant in their own community that's making a difference that they care about, but can also potentially benefit from being a co-owner.
So let's dive into Equivesto. What exactly is it? How does it work? Who can raise money on it?
Yeah, so Equivesto is a Canadian equity crowdfunding platform. We are licensed as what's called an exempt market dealer. So we're licensed by the securities regulators, specifically the regulators in Ontario, BC, Alberta, and Nova Scotia, to broker and organize private investments in private companies. And we make use of the equity crowdfunding rules as created by each securities regulator to facilitate that. I know that was a little bit too much legalese, but we are licensed, we are regulated by the government, and we're doing everything in a very sort of safe and secure manner. But essentially, it's a platform where companies can post themselves available for investment. Typically, campaigns are up to a maximum of 90 days. Companies can raise up to $1.5 million on the platform, and then they can invite investors, both their extended community and the general public who live in the 4 provinces I mentioned, can sign up on Equivesto and choose to invest in that business during the campaign, starting with as little as $100. During the investment process, part of our responsibility as an exempt market dealer is to review what we call suitability and due diligence on those investors themselves. So it's our role to make sure that those investors understand, yes, these investments are high risk. Yes, it's in a private company. There's a chance you could lose your entire investment. And yes, you probably won't be able to sell your investment or take your money out in the short term. All of those pieces are important to educate those investors so they understand the risks and can help judge them for themselves. So we play that role as well. And then the investors can invest directly in the business. During the campaign, the funds are held in a segregated account. And if the company hits their minimum raise goal, then after the campaign is closed, the funds are released to the business. But if the company doesn't hit that minimum raise goal, the funds are actually refunded to the investor. So that's another way to sort of protect those minority, smaller investors. So, okay, I'm putting $100 towards this company, this $100 by itself is not going to make a big difference. I want to make sure, they don't just raise like $500 and then my money is now stuck in this business. And that minimum raise objective sort of helps protect that. Investors also have a 48-hour backout window. So even after you've invested, you have 48 hours to change your mind, no questions asked, and you can have a full refund. And on top of that, no investors pay any fees to Equivesto at all during this entire transaction. So, if you're investing through a discount brokerage, potentially you're paying a fee per trade, things like that. No investors are paying fees on Equivesto. The company is the one who pays the fee to sort of facilitate all the investments.
That's great. When did your platform go live?
Yeah, so Equivesto, we got our license as an EMD last May, and we actually launched the platform on August 31st of 2020. So right smack dab in the middle of the pandemic, we launched. And yeah, it's been actually really great. We've been able to help several companies since then.
So this all sounds great. Getting community to all chip in, but does equity crowdfunding really work? Can you describe 3 successful raises for companies or campaigns on your platform?
Totally. Equity crowdfunding most certainly does work. Before I even mention that, I will say that Canada is a little bit behind when it comes to equity crowdfunding and the rules around it in sort of allowing it in the Canadian market. So we look to places like the US and the UK where they've had equity crowdfunding for much longer, for a little bit of an example or sort of a demonstration of what is potentially to come. So the UK has had equity crowdfunding for about 10 years, and the US has had it properly for about sort of 5 to sort of 7. And there are many platforms in both countries having raised hundreds of millions, if not billions of dollars for companies successfully through equity crowdfunding there. So it's definitely been proven in both of those markets, but it does totally work in Canada as well. So just on Equivesto alone, we've had 4 successful campaigns close already, actually 5. We had one close last week successfully, and we have 2 more campaigns that are currently live right now. Razol, which we were just mentioning earlier, is actually, they just passed their minimum funding goal, so they're just over 100% funded. And we have one campaign as well that's sort of just gotten started. But of the campaigns that have closed, I'd be happy to give you some examples. So one great example is Cordelia's Locket. So Cordelia's Locket is soon to be launching restaurant in Squamish, BC. It's a restaurant founded by 3 women. It's a totally women-led team, and they're approaching hospitality from a different direction. So instead of a traditional restaurant, which ends up being sort of very male-dominant, almost like a patriarchal structure, they've built the restaurant from kind of the ground up, really putting value and control in each of the employees who joins the team. And that's something that's been a core tenet of how they run their business. They ran a campaign successfully earlier this year, and they raised 282% of their goal, which was fantastic. And, their investors are excited to be supporting and participating in that business. And so that was a really great win for them. Another example would be Aerolife. So Aerolife also closed successfully earlier this year. They raised 217% of their target raise amount. Aerolife is a technology, both software and hardware play. Essentially, they're creating a phone, a physical smartphone, but also the supporting data plan and cell service and everything all combined, and they're offering that for free to individuals once they launch. And the idea there is Right now, our phones are recording all sorts of data about us anyways, and that's being sold by the phone companies to advertisers, and it's being sold by the apps to advertisers and all this sort of stuff. With the AeroLife phone, it's called the Be Free phone. The whole idea is, okay, there is value in all of your ad data, and people should be paying you for the value of that data. So instead of you paying to have a cell phone and you paying to be on a network, and then they take your data anyways, it's you get to be on the network, you get the phone for free, and in exchange, you're offering your data as part of that trade. So that is a very interesting sort of tech forward play, which is another successful example. And then Hutsi Financial, which will be the third example I use, they just closed last week. They're over 327% funded, which is fantastic as well for them. They're a new neobank. Essentially, a neobank is like a fully online digital bank that uses a real existing bank, all of them are real banks, but they use an existing kind of brick and mortar bank as their back office and compliance piece. So Hutsi, their neobank, is all about improving financial literacy and education for all individuals, especially individuals who might have been struggling with building up their credit score and gaining access to financial services. So once Hutsi launches, hopefully in several months, part of their product offering is that instead of needing to go to, for example, a payday lender to borrow money ahead of your paycheck at a very high interest rate, they'll offer free advances on your paycheck. Yes, a free advance, so no interest at all involved, and you can get an advance on your paycheck a few days ahead of time. And other products like that, they're really focused on improving that financial literacy and education. And so that was one thing that really excited us about what they're doing. So those are three examples of companies that raised very successfully on the platform.
That I've interviewed a few of them. The companies sound great. So let's say I'm a founder and I'm interested in equity crowdfunding. What is the process like for startups?
Yeah, the process does take some time, and it is a serious undertaking. It's not something you can do in a day or two, and you just kind of throw it up and see what happens. It is a serious decision to do an equity crowdfunding round because you are officially offering securities, shares in your business for sale. In terms of what the process looks like, it is very hands-on with us. We work very closely with the companies who are raising on the platform, and we help sort of every step of the way. Essentially, a company would come to the website. We have a full learning center where they can get a lot of information before they even need to talk to us or make any decisions. But once they decided to move forward, they would submit a short form application to us. Comes to us, we would have a couple conversations with them, confirm their fit, confirm their interest. Then we would give them access to our longer form online application to approve the whole business. That's where we're collecting, personal information for us to run the background checks and all that sort of stuff. Also, that would all sort of get submitted there. Once that information is submitted to us, they would sign the agreement to work with us and pay our application fee. Then we would go through about 2 weeks of due diligence and then several additional weeks planning and structuring the campaign, helping them with, reviewing their pitch deck, determining a fair valuation, structuring the deal, all that sort of stuff. We would also work closely with any marketing firm that they would want to work with or any lawyers that they have on their side. Also, during this time, we would highly encourage them to work on building their community and confirming that community interest in coming to invest. Doing pre-campaign marketing and notifying of your community is an important step for having a successful round. So we would highly encourage them to be doing that potentially during the entire process where they're chatting with us. Then we would officially launch the campaign. Campaigns can run up to 90 days, but typically they run about 45 days. That leaves the potential to extend it a little bit longer if needed, but typically 45 days is kind of the sweet spot. Then if the campaign closes successfully, that would start the 30 days of the closing process, when we would consolidate all the information, confirm that all the documents were properly signed, send the money over to the company, and help them and their lawyers make the legal submission to the regulators. And then that ends the campaign.
So you mentioned, share price and company value. How is the share price and company value determined?
It's a great question. In terms of valuation, typically companies do approach us with some idea of where they're wanting to raise, but part of the service that we offer is we really work through their entire setup, their valuation, and do give that a good hard look. Unlike a sort of traditional investment, it's not a situation where the lower the value of the investment, the more ownership we as the investor would get. We're a third party operating in the middle. And so we want to make sure that they get a fair valuation that does reflect all the work that they've put into their business. But at the same time, we want to give them advice so they're not potentially overvaluing themselves and getting into a potentially difficult situation in the future in case they need to go out and raise capital again, but the market might not be willing to pay the same price. So we don't want anyone to have down rounds. So we really help them a lot with determining that valuation. And then once you have the valuation compared to the number of existing outstanding shares and the amount of money they're trying to raise determines the share price.
Is there a specific type of company that's ideal for equity crowdfunding, or one that you would favor over another?
So part of an important piece of the platform and what we're trying to do is improving accessibility and equality for all the companies trying to raise. I would say that anytime a company is looking to raise capital, equity crowdfunding is really about bringing the existing crowd, the existing community of a company in to invest in them. So we would really encourage them to, and we would support companies that already do have a strong community that situates them well to raise successfully with equity crowdfunding. I would also say that typically when going out for external investment in your business, having value tied to the business itself is also important. I'll explain that in a little bit more detail by saying, if you're running a purely consulting company where the value of your business is only in the value each of the employees brings with their knowledge, for example, yourself as the founder and one or two or three other consultants, if all of those individuals were to leave, the business wouldn't necessarily have a lot of residual value. So in that situation, it's a bit harder for investors to see the benefit of putting their money into that business as an investment. So businesses that have created some additional value or assets of some kind in themselves. So there's some intellectual property, you've built a piece of technology, or you're a small business and you've got a building that you're operating out of and you have existing customers, things like that. That situates them well. I would direct any interested company to definitely check out our website, equivesto.com. We have a whole section for companies about what we're looking for and what they need to apply, as well as a very detailed learning center that sort of walks through the whole process, both from the company and the investor perspective.
So can anyone invest, and how does it work for investors?
Yeah, so the whole point of the platform is to make investing in private companies more accessible. To invest, you need to be over 18 years old, not currently deceased, and you need to be living in one of the 4 provinces that were licensed. So again, that's Ontario, Alberta, BC, and Nova Scotia. You don't need to be a Canadian citizen, but you do need to be a resident of one of those 4 provinces. To get started with investing, you can come to the platform and see some of the deals that are currently posted, and then you can sign up. The sign up process, as I mentioned, takes a little bit of time because we have to collect that personal information from you to both verify your identity, but also to go through and make sure that these higher risk investments, because all investments on Equivesto are high risk, are suitable for you, your financial goals, and your personal financial situation. That's part of our job and the requirements put upon us by the government. And we do take that quite seriously. So we ask those questions during the sign-up process, things like, are you self-employed? Are you employed? Are you retired? What does that situation look like? What was your income last year? What is your risk tolerance? Have you invested before? Those kind of questions to get to know you. After that, we will review that information and set you some personal investment limits if your account is approved. And our goal is to make it as accessible as possible. So it's more likely that as long as, you don't only have $4 to your name, you will be approved. And then those limits are set based on the information you provided. The government sets a maximum investment limit for the general public at 2,500 per company. That's the limit that we set. If individuals, when applying, have a larger income or a larger net worth, they can provide further documentation to support that, and then we can approve higher limits. So the platform does, of course, support high net worth accredited investors as well. As long as they provide the right documentation for that, then they can have much larger investment limits. Once approved, then it's easy just to look at the offerings on the campaign page. You can see sort of what each one is proposing. Click invest through the platform. You fill out a little bit more information, choose how much you'd like to invest, and then sign the documents digitally, and you provide your bank account information to move the money.
So I'm going to go off script here and ask you, what was it like getting regulatory approval for the platform to go live, and approximately how long did it take?
Yeah, so it's a good question. It's one of those things that, it took a long time, and it was a long process to sort of get ready and to sort of approach the regulators. Took us about 1.5 years, 2 years to build all the technology. We had a chief compliance officer sort of from day one. And so we worked very closely with the chief compliance officer to build and set up our technology in a way that we knew would be compliant and with compliance at the forefront, the focus. Once that was all built and we had all the right sort of background legal documentation, everything that was required, then you actually submit an application to the regulator to get licensed. And that process can take any sort of range of time. People will sometimes say, hopefully it can be done in as little as 3 months. For us, it took about 1 year and 5 months to get the license. And it's, a lot of back and forth with the regulators. They're sort of asking questions, looking for clarity on things. They wanted a whole run through of the platform, how it works, reviewing all of our legal documentation, our policies and procedures to make sure that, we're going to operate the business in the right way that's protecting investors and protecting companies and making sure to follow the rules. And then, eventually we received the license. So it's good that the regulators are there doing that role to protect the capital markets. It's certainly very important. It took a bit longer than we were hoping.
So what does success look like to you, and how will you know when you've achieved it?
To be honest, I think, we've already hit success already. For me, success is really about being able to make a difference and help companies get the capital they need to go and be successful. So the fact that we even did that for one company and that they're now able to go and do the things that they want to do, and we're able to help their community sort of share and participate in that growth, that is already a success from our perspective. But we do want to grow and build on that. We want to be able to help more companies. We want to make the experience of investing better. And we want to make sure that, more people have opportunities to invest in great companies.
What excites you the most about where Equivesto is heading in the future?
I think there's a lot of exciting things about Equivesto and what we're doing. For me, it's really about bringing technology and sort of accessibility, diversity, and equality to this space. It's really been one that was very traditional, very manual, very old school. And the fact that we can be here trying to make that difference, trying to help more people come in and participate, even sort of talking to investors who are using the platform, who just say like, wow, like this is amazing. I, didn't realize that this would ever be possible. I always wanted something like this to exist, but there never was anything. And now you guys are here. I find that really fulfilling personally. And so being able to do that is awesome.
As a founder, culture is always hard, and probably even harder now that everyone's remote. If you had to come up with 3 words to describe the culture you want to create at Equivesto, what would they be?
I would say open and sort of welcoming. I'm going to include that as one bucket, but that's technically 3 words right there. Open and welcoming. I would say diverse and respectful. We're looking to have a culture that's seeing value in other people's experiences, in other people's backgrounds that they can bring and sort of enrich the whole community together. And the other would be sort of secure and compliant. We really are focused on making sure that everyone is protected, safe, and we're really following the regulations and even going sort of beyond the regulations to make sure that everyone is taken care of and has a great experience. The traditional investment process, especially for private companies, can sometimes be a little bit challenging. And it's certainly, if you don't have a financial background, trying to figure out how to navigate that and participate with all the legal documentation involved would be a massive barrier to entry. And we want to make sure that in a compliant way and in a secure way, we can make that so much more accessible. So the information that you need is presented to you in a way that you can understand and you can consume, but also, nothing is sort of brushed over or hidden. You're still seeing the risks, you're still seeing the details and the potential. All of those things are presented to you, and you can go and sort of complete that necessary documentation in as easy and streamlined a way as possible.
So, everyone talks about COVID these days because it's the number one thing to talk about. Have you pivoted or your main value proposition changed at all during COVID?
I think, COVID has been a real challenge for a lot of businesses. And initially, our focus was very much on the startup ecosystem, helping startups, because a lot of small businesses never consider going out to raise capital from investors in that kind of way. Typically, they're raising capital through debt. That's kind of how small businesses are operating. With COVID, however, everyone was already carrying debt going into COVID, and suddenly, with these sort of drastic changes, we spoke to some businesses and we learned from them, oh, wow, like this is actually something that could be helpful. And so we realized that even within our own biases, we sort of thought, oh, this is mostly for startups. But with COVID and those kind of conversations, we sort of learned and realized that actually, we don't need to limit ourselves about who can sort of benefit and make use of equity crowdfunding to support their business. And so we've actually expanded with the way that we approach companies and the language that we use to try to be more inclusive of different types of small businesses, so that more people have access to raise capital in this way if that's a fit for their business.
And that's great because, sometimes people come to me and they with an idea or business and, and I like roll my eyes, never, because I've never heard of it, never heard anybody doing something. And then you dig in, you start talking a little bit more, and it's a big business. They're doing great. They're doing this kind of stuff. You would never think about some of these things. And it's great to do the reverse, where you're making them aware that they have more options, that to these businesses out there, that they have more access to capital than they might have thought. I like to share both successes and failures. So maybe there's a chance that someone listening or watching can learn from our mistakes. Can you tell us of a time where you screwed up or made the wrong startup decision?
Yeah. So one thing that, this is something that we as the Equivesto team really learned, I guess, a hard lesson right off the bat. We launched with some really fantastic companies on the platform, but not all of them were successful in the way that we were hoping. And we learned through that process that making sure there is a very solid marketing plan and marketing team in place to really help that startup connect with their extended community, grow that extended community, and even build the community itself during the campaign and before the campaign is really critical to success with equity crowdfunding. And that was something that we were aware of, but not as focused on the criticality of that success when we first launched. And so that's something where we've really learned from that decision and put that piece of helping to build and solidify that community prior to campaigns launching. And we have really seen a change, as I'm sure you've seen on the platform, in terms of success of raises. So we went from kind of like a 50 or 60% success rate to now we're at basically 100% success rate over the past several months. And so that change, that was a challenging lesson, but it was a meaningful one. And we've been able to learn from it, make improvements, and ensure that that translates to more success for every company we work with.
With your experience now with Equivesto and helping founders and other businesses raise money with your previous experience, do you have any tips for founders looking to raise funds?
Yeah, raising capital is and can be quite challenging. So you want to think about all of your options. You want to give yourself as much runway as possible. A lot of times I'll speak to founders who come to me and say like, okay, like, we're starting to run out of money now and I need to raise money now. And we try to help how we can, but in reality, you want to start thinking about and actively raising money probably like 6 to 9 months before you need it. Because even if you go the traditional route with angels and VCs, where you think they've got the money like right there, can't they just give it to me? Even in that situation, it is going to take 6 to 9 months to close that. The old sort of terminology for VC, private equity investing is 9 months, 9 meetings to actually get the deal closed and the money in the account. With equity crowdfunding, we try to shorten that a little bit, but there still needs to be time and preparation put towards, building the community, notifying them, getting them ready, and then preparing the legal documentation for the campaign, running the campaign itself, and then closing it. So making sure to, be aware when you're going to need to raise capital and then start raising capital 6 to 9 months before you actually run out of money is, I'd say, the biggest thing.
So you and I have been involved in a lot of pitch competitions, and pitching to investors or to a crowd is important. Can you explain how important it is for an entrepreneur when raising money, the ability to pitch?
Pitching is very important, and that's one piece that's been something we've thought about a lot at Equivesto, because built into that is, okay, that means you can only be a founder if you're eloquent, well-spoken, you're comfortable speaking in front of big rooms. You can potentially, you have minimized any accents or anything like that. You're fluent in English. These are all subtly massive barriers stopping entrepreneurs from raising. And, we're all about trying to sort of reduce barriers. So that's something that we've thought about. In the traditional space, your pitch is everything. You've got one meeting with that VC or that angel group to sort of make an impression. And if that pitch is not successful, they're not going to invite you back, no matter how hard you try. So that is so critical in the sort of traditional space. With equity crowdfunding, because you're putting all of your information on a campaign page, even if you add a video or something like that, you can have a script for a video, you can craft it, you can take time on it. We're here to give feedback about what's compliant and not compliant in the language you're preparing. If you're working with a marketing team, they're also going to help. All of those things can work together to sort of mitigate a situation where a founder might not be as fantastic a public speaker, which is something that we're excited about. But still, that first impression, whether it's in a video you've crafted or the slide deck you've prepared on the campaign page or whatever that is, that first impression still does mean quite a lot. But I think, hopefully with more people using online investing as opposed to the traditional in-person pitching, there's a little bit more variety in the way that first impression is sort of delivered to investors.
You definitely have a lot more
leeway
when you have a video than live, so you can do a lot more things. I feel like it's cheating, but at the same time, if it levels the playing field, if it gets more people funded, and I say it's cheating because I run live events and I like people pitching live, and so, but people, I put my other hat on as a startup coach. People have to sell their business, right? So whatever it takes, if that means pre-recorded video and marketing, that's what it means. What's your favorite book for entrepreneurs?
Yeah, so one book that I would really recommend to anyone who's looking to raise capital and wants to sort of get that sort of understanding of how that works is Venture Deals by Brad Feld. That is a really great book. It's written from the US VC perspective. So when you hear the numbers in that book, don't think that's necessarily applicable in Canada, because the VC startup marketplace ecosystem in every country is quite different. So I know the US is the biggest one. And so people really focus on the US. If you are on Crunchbase newsletter or anything like that, it's all like, oh, this guy raised $500 trillion on a pitch deck, whatever it is. So don't focus too much on the numbers, but the structuring, what to look out for, how to think about these documents, why those kind of legal pieces are important, that's a great and very useful book to sort of understand how the venture capital space works from the mind of a venture capitalist. I know a lot of people that I speak to sort of think about venture capitalists as the same as an angel investor, and that's just somebody who's got a bunch of money and they're looking for places to put it. And that is potentially how some people approach it, but I would say that's not how the majority approach it. So potentially this book can help, explain a little bit more from that perspective.
Yeah, and there's a lot of nuance in the book, and it's a great read. Um, any advice for startups who are trying to get advisors to help open doors or round out their experience in their team? How would you go about it? I'm new in this industry or new to Canada, or I don't know anybody in this area. How do I find advisors?
Yeah, that's definitely a good question. There's oftentimes a fair number of people who are willing to support and help work with startups. You probably want to start at a community that's developed around supporting startups in the first place to see if other people have come there with an interest in helping startups. So TorontoStarts, your community, Craig, is a great place to sort of start to go and sort of talk to people. If you're thinking about applying to an accelerator, accelerators and incubators will often have advisors work as sort of part of their community. Equivesto acts as a sort of startup supporter and advisor with a few different accelerators in the Canadian space. You can also consider, even reaching out to individuals directly and just, letting them know. Obviously, the further that startup is in connection from you, potentially the more you need to offer them in terms of, a stock option or potentially even pay or something like that. But you'd be surprised if you really are just asking for maybe half an hour or an hour of their time to give you some advice, how willing people are to sit down and talk with you. But never approach them for money first. You don't message someone saying, hey, will you give me advice on this thing? Actually, I want $1 million. Give me $1 million. Don't do that.
I've also seen people approach me, especially with like weird, trying to do something funny to get your attention and stuff. For me, that never works. So it might work with other people. I don't know. Maybe they're learning that from accelerators. You need to teaser hook and stuff. But if you're honest and direct when you're saying, I want to sit down and need some advice, this is what we're doing, most people will say, okay.
Yeah, I would agree. Just, the straight up, don't try to oversell, just be comfortable and confident in yourself, and just, reach out directly.
So you mentioned a few startups, but who's raising on your platform right now?
Yeah. So I mentioned we did have one campaign close last week, but we have two campaigns currently live. One is Razal, which just hit over 100% funded yesterday, which is fantastic. Another is One Development Corporation, who is over 25% funded and well on their way to getting more investment.
And what type of company is Razal?
So Razal, it's a little bit hard to explain in the proper way because they have to make sure they're a little bit regulated as well with sort of how their business operates. But essentially, it's a crowd purchasing platform. So individuals can sign up and there's a product, let's say a Tesla Model 3, which is one that they currently have on the platform. There's a Tesla Model 3, which you could just go out and buy for like 100,000 Canadian. But on Razal instead, everyone who signs up can instead put $50 into the Raz. And then the Raz, there's a maximum number of people who can join. So once the amount, the dollars joined adds up to the price, the 100,000, then it's filled. And then through a automated random number generator, it chooses an individual who would then receive the item. So essentially, this is a way for people to access potentially much higher cost items that they wouldn't normally be able to afford. There's things like a PS5. There, as I said, a Tesla Model 3 full car currently on the platform. They've got a bunch of MacBooks. They also do a lot of things like seasons tickets to sporting events and stuff once that's all open again. But it's an exciting way. Some of the Razes are as cheap as $1. So it's an exciting way to sort of get involved and potentially get access to an item that you wouldn't normally have access to.
Yeah, I've seen stuff like they had a Super Bowl package. People won tickets and hotel and stuff to the Super Bowl. I've seen,
Mhm.
and I guess that's not the right word, but they also season tickets for things like the Leafs, where
Mhm.
a
They're so
group was.
expensive. I could never afford that myself. Yeah.
Yeah, and that's kind of when I talked to Joe about it, he was this is the idea behind it is the luxury style things that you would never have a afford normally. Now you have a chance, and it's interesting to and by doing that someone is going to get it, and it's
Mhm.
part of that feeling that that you or someone else is going to be the primary owner of that object.
Right. One thing that I like as well is it's not totally open-ended. There's a couple other platforms that offer a similar sort of idea, but potentially it's in exchange for a donation. But with those sort of platforms, I think we all know which one I'm referring to. With those sort of platforms, there's an unlimited number of entries, so you have no idea how many other people are participating. And so while the benefit does go to charity as opposed to here you're purchasing it from a person, there unlimited number of people could sign up, and your chances could be infinitesimally low to get it. Here there's a fixed number of people who can participate. You can see exactly how many spots there are, and so what your chances are with the random number generator. And of course, anyone at any time, if they like, could just pay the full price and have the item.
It's an interesting. People should go take a look at it. It's an interesting company, and there's some FOMO as soon as you start looking at it. And let's which you is the type of company you want to invest in. Just out of the top of my head, if it's driving you FOMO right away, what do you think about everyone else? You mentioned One Development. Is that the other company?
Yeah, so One Development is the other company currently raising on the platform. Essentially, they are a sort of boutique, smaller real estate development company. They're focused on the Toronto and the GTA area. Essentially, what they do is they find up and coming Toronto neighborhoods or good Toronto neighborhoods, and they find actually potentially like the worst house in the whole neighborhood, and then they would buy it, tear the house down, and really build a perfect dream house. They use amazing architects, the highest quality builders and contractors and everything to make really a beautiful finished product and sort of ready for somebody to move in and buy. So what's interesting about this is, it is a way for people to get into and participate in the Toronto real estate market, even if you don't have the money to, put up a down payment of your own on a house. It's still a way to sort of participate in what's going on in that market. At the same time, this investment is actually the first investment that we've offered on Equivesto that is TFSA RRSP eligible for certain investments. So if you are interested, you can actually invest in One Development from your tax-free savings account or an RRSP. There is a couple more steps involved. You would have to set up an account with a third-party trust company, and sort of we can walk you through that whole process if that's something you're interested in as an investor. But it is exciting for us that it's the first company to offer that sort of tax protection and benefit. And it's also got an interesting offer in regards to the actual securities and everything. So they do have it is a preferred share, and they're offering dividends and a buyback and everything. I would definitely recommend people go to the campaign page itself if they want to learn sort of more about those details. But it is also the first offering to offer immediate dividends to investors on our platform.
Very nice. So what is next for you and Equivesto?
Yeah, so for us, really, it's just about spreading the word, letting more people sort of know about this, and helping more companies to raise and sort of empower their own communities. We have several more companies in the process of getting ready and launching. We're working with them all right now. We've got dozens more companies beyond that we're talking to as well. We're just looking to help more businesses raise capital and help more people have an alternative way to invest in great businesses.
So where can people go and find out more?
Yeah, so the best place to go to find out more is equivesto.com, Equivesto. You can see the live deals. You can visit our learning center to learn more about the process, and you can sign up from there. You can also check us out on all social medias at Equivesto and on Twitter at Equivesto Inc. We're always posting content and updates from there. And if you want to see what's going on, but not fully sign up at equivesto.com, you can actually join our newsletter. So you'll get an update every 2 weeks as to what's going on with the platform.
Thank you for taking the time today, Alex, to let everybody know about you and Equivesto and this exciting platform and exciting times for startups raising money. I really appreciate it.
Thank you, Craig. It's great being here. And I look forward to chatting with you again, I think tomorrow. We've got that event in the evening.
Oh, investor speed dating tomorrow night. Yes.
Yes.
I didn't mention it because, this podcast will go out later at some time, but yeah, we do monthly investor speed dating. Check out TorontoStarts.com/events or, see the investor speed dating if you want to meet investors and whatnot and talk to Alex. And this month we have Maple Leaf Angels. And I think we even have a John Irwin from Layton stopping by. So if you want to talk about tax credits and grants and stuff. All right. Thanks everyone. We'll talk again soon.